Over the last few months, governments around the world have been rushing to develop their own central bank digital currencies, or CBDCs. Now, it didn't take them long to realize that developing a digital currency is no easy task, and this has led some governments to turn to the cryptocurrency space for assistance. Dozens of enterprise-oriented crypto projects have consequently offered themselves up to fill the role as the blockchain that will host the perfect CBDC. One of these crypto projects is Algorand. Over the last few months, Algorand has been in talks with dozens of governments around the world to launch their CBDCs and has secured multiple institutional partnerships as well. Today, I'm going to take a close look at what Algorand has been up to and what its current and future plans and partnerships could mean for the Algo token. I know you're eager to begin, but there is a disclaimer I need to dish out before we dig in. If you're looking for financial advice, I'm afraid you won't find any here. That's because I'm not a financial advisor, so please don't shed any tears. If this is your first time seeing my face, my name is Guy and crypto rules this place. The Coin Bureau is home to some of the highest quality crypto content on the tube. Coins, tokens, news, reviews, and market moves. If you're into crypto, this channel has something for you. The crypto market moves fast, so hit that subscribe button and ping that notification bell to make sure you're not last. Timestamps can be found in the timeline below. Feel free to skip around, but just know that it helps me out if you watch the whole video. So, now that you understand, let's get on with Algorand. If you're unfamiliar with Algorand, here's what you need to know. Algorand was founded in 2017 by MIT professor Silvio Micali. Silvio is famous for being the co-creator of various cryptographic technologies like zero-knowledge proofs. He's also the 2012 Turing Award recipient, which is like the Nobel Prize for computer geeks. Silvio says that he was inspired to create Algorand after hearing about the famous blockchain trilemma of scalability, decentralization, and security proposed by Ethereum founder Vitalik Buterin in 2016. Silvio argues that the idea that you can only choose between two of the three is false, and he's also critical of the shortcomings of the proof-of-work and proof-of-stake consensus mechanisms. Naturally, Algorand is the solution to these problems. Like many cryptocurrency projects, Algorand is technically managed by the non-profit Algorand Foundation based in Singapore, which commissions Algorand Inc., a for-profit software company in the United States, to develop and maintain the Algorand blockchain. Algorand is also one of the best-funded cryptocurrency projects in the space, raising nearly $130 million between its public and private sales of Algo in 2018 and 2019. The Algorand blockchain went live in June of 2019 and enabled its smart contract functionality later that year with its 2.0 upgrade. Now, Algorand uses a unique consensus mechanism called pure proof-of-stake, which makes it possible to process 1,000 transactions per second without sacrificing security or decentralization. Pure proof-of-stake involves two types of nodes: participant nodes and relay nodes. Participant nodes participate in consensus, and relay nodes facilitate the communication between participant nodes. In pure proof-of-stake, 1,000 participant nodes are randomly chosen to produce a block. Then, one of those 1,000 winning participant nodes is randomly selected to add its block to the Algorand blockchain. In both cases, the chances of being selected are proportional to how much Algo a participant node has staked. The random selection process and blockchain data are managed and stored by relay nodes. This setup makes it possible for mobile phones and even basic computers to participate on the Algorand blockchain as participant nodes and allows for instant settlement on Algorand. No waiting around for multiple block confirmations. With these facts, it should come as no surprise that there are now over 10 million Algorand wallet addresses and over 500 projects building on the Algorand blockchain. Now, if you want to learn more about how Algorand works under the hood, then be sure to check out my last video about the project by using that link up there in the top right. A lot has happened since I covered Algorand last September. In October, the Algorand Foundation announced the 10 winners of its Asia Accelerator program. The Algorand Foundation has actively been funding projects building on Algorand since the project began. In November, Circle's USDC stablecoin officially launched on the Algorand blockchain, and there's currently over 100 million USDC circulating on Algorand, and I will point out that Algorand's USDC has an interesting total supply of 18.4 trillion. Now, perhaps this is a glitch, or an attempt by Algorand to match the total dollar money supply. Ambitious goals. Now, shortly afterwards, Algorand founder Silvio Micali proposed a new governance structure and roadmap for the project, which will make it possible for regular Algo holders to have a say in how the network is run. More on that in a moment. In December, Algorand partnered with Climate Trade, a carbon credits trading platform. This will see tokenized carbon credits issued and traded on the Algorand blockchain. For those unfamiliar, carbon credits are given to companies by regulators when they do something that is considered to be good for the environment, such as installing solar panels on their buildings. While this carbon credit scheme is intended to reduce greenhouse emissions, it has instead created a multi-billion-dollar carbon credit trading market, which Algorand will now be a part of. Interestingly, it seems Algorand didn't have a data oracle until February this year when they partnered with Razor Network. Now, as many of you will know, decentralized applications require data oracles for asset prices and other off-chain data. The long absence of an oracle might be why Algorand doesn't host any well-known dApps. Anyways, in March this year, Algorand partnered with Meld Gold to bring tokenized gold and silver to the Algorand blockchain. Algorand also partnered with the SIAE, the largest Italian copywriting agency with over 4 million copyrights, which are now publicly verifiable on the Algorand blockchain. In April, Algorand partnered with Vesta Equity to tokenize real estate. This will make it possible for individuals to own a part of a residential or commercial property via the Algorand blockchain. Balancer also announced that it would be expanding to Algorand. Bancor is currently one of the biggest DeFi protocols on Ethereum, with over $2 billion in total value locked. Just a few days ago, Algorand partnered with A-Note Music, a platform that connects investors to musicians. Another thing that Algorand has done over the last few months is update Algo's tokenomics. As a brief recap, Algo has a maximum supply of 10 billion. Only 25 million of these tokens were sold during the public ICO in June 2019, shortly before Algorand's mainnet launch. The price tag per Algo for this public ICO was a whopping $2.04, which is a fraction of the cost that private investors probably paid for their Algo tokens. Not surprisingly, the price of Algo began to tank shortly after listing as the Algorand team, the Algorand Foundation, and all the private investors began to sell some of their tokens. To say that retail investors were angry is an understatement. Algorand's response was to offer 2 Algo token buybacks in August 2019 and June 2020. To quote the Algorand Foundation, nearly all 25 million Algo have been redeemed, meaning just about every retail investor who purchased Algo opted to go for the buyback option rather than hold. This makes sense considering the 90% buyback price was 4 times higher than the market price of Algo at the time. Though these repurchase tokens are noted as having been burned, they are technically custodied by the Algorand Foundation, which has also apparently been staking these redeemed tokens. To make things worse, Algo's fixed supply means that there is a limited amount of time before the pre-mined tokens used to pay for participation node and relay node rewards run out. Now, obviously, this economic structure is not sustainable for Algorand's long-term growth, which is why the Algorand Foundation reworked Algo's emission and allocation in December last year. For starters, the Algo tokens allocated to all parties will now unlock over 10 years instead of 4 years. This means Algorand will need to have enough adoption to survive from transaction fees after 2030. In addition, the 2.75 billion Algo that was reserved for future token sales will be reallocated to community incentives, governance, and ecosystem support. As far as I understand, 2.5 billion of these Algo tokens will be allocated to governance participation alone, which requires you to lock your Algo for extended periods of time to earn a share of that Algo. Algo's updated 10-year emission schedule can be seen here. For reference, over 20 million Algo tokens are being given out as participant node rewards every month. And it's also worth pointing out that over 55% of Algo's total supply is technically in circulation and seems to correspond to the amount of Algo currently being staked online and offline. Unfortunately, Algorand's modification of Algo's emission and allocation has not done much for its price. Algo has only gone up 3x since the start of the year, which is much less than most cryptos. This is somewhat surprising given Algorand's impressive technology, active development, institutional partnerships, and community growth. The cause of Algo's poor price action seems to be something called, quote, early backer accelerated vesting. This tokenomic change was proposed by Algorand's early backers in late November last year. Basically, in exchange for reducing their initial Algo allocations, Algorand's early backers can unlock more of their remaining tokens if the price of Algo goes above the average price of Algo in the previous month. The Algorand Foundation has been providing regular updates about this accelerated vesting schedule, and the most recent one was triggered in April this year. What's crazy about this update is that early investors were able to claim more of their Algo tokens because the average price of Algo had gone up by less than a cent compared to the previous month. I suspect that this accelerated vesting scheme is why Algo's parabolic price move in February came to a sudden stop. An accelerated vesting schedule update on February the 22nd supports this theory. It's not the early backers that are actively selling their Algo either. The Algorand Foundation has been actively selling its Algo coins to fund operations and ecosystem expansion. This can be seen in the Algorand Foundation's monthly transparency reports. Now, similarly to the accelerated vesting schedule, the Algorand Foundation has its own scheme called structured selling. This structured selling happens every day and is apparently done automatically when the following conditions are met. The Algo being sold must account for less than 5% of the total trading volume in a given day. All Algo sales must be made above the current market price. And Algo selling stops if the price drops too much compared to its recent average price or drops by more than 10%. Now, what this means is that whenever the price of Algo goes up, Algorand's early backers and the Algorand Foundation will sell, thereby suppressing its price potential. To make things worse, there are not many demand drivers for Algo. Staking rewards are low, and the minimum stake is just one Algo. There also aren't any popular dApps on Algorand, at least not yet. There seems to be some hope on the technical side, however. Algo has been consolidating for quite some time and could be poised for a breakout to the upside, assuming Bitcoin doesn't crash, of course. More importantly, Algo is listed on major US exchanges, namely Coinbase. Algo's low price tag is likely attractive to inexperienced retail investors who've been flocking to Coinbase by the millions in recent months. And Algorand could also be on the brink of securing a CBDC contract. As I mentioned in the introduction, governments around the world have been turning to the cryptocurrency space for assistance with their CBDCs. This is primarily because all the developers who know how to build robust digital currencies and decentralized applications work in crypto, and the things they've made have been battle-tested too. In my CBDC conspiracy video, I considered the possibility that Stellar would be selected as the blockchain to host the digital US dollar. My reasoning for this was the Stellar Foundation's close work with regulators in the United States and its partnership with Circle, which issues the USDC stablecoin that is quickly becoming a CBDC template. Now, some of you correctly noted in the comments section of that video that Algorand is a more likely CBDC blockchain candidate than Stellar. This is for a few reasons. First, Stellar is much more centralized than Algorand. It only has 24 validator nodes compared to Algorand's 1100 participation and relay nodes. That said, Algorand is also technically quite centralized since there are only about 100 relay nodes that handle the bulk of blockchain operations. Still, Stellar is apparently centralized enough to have a single point of failure, as revealed by the downtime it experienced in April this year. According to Blockshare's Stellar Explorer, nearly a quarter of all transactions also failed in the past 24 hours, which would be unacceptable for a CBDC network. Second, Algorand seems to be much faster than Stellar. Although Stellar's theoretical transaction speed is 4,000 TPS, this is closer to just a few hundred TPS in practice. By contrast, Algorand can process 1,000 transactions per second, and Algorand's COO, Sean Ford, noted in a recent interview that developers are currently working on increasing Algorand's TPS to 10,000. While both Stellar and Algorand have transaction times of about 5 seconds, transactions on Algorand have instant finality. This does not seem to be the case for Stellar transactions. Third, Algorand already has a CBDC contract with the Republic of the Marshall Islands. Stellar also recently announced that it had partnered with the Ukrainian government to launch its CBDC, but Algorand's CBDC will likely launch sooner given the timeline and scale of the project. This will give other governments confidence that Algorand's blockchain is robust enough for a CBDC, and this sort of first-mover advantage is everything in cryptocurrency. Fourth, Algorand was created by someone with serious credentials from one of the top universities in the United States. Stellar was created by Jed McCaleb, who actually dropped out of the same university Silvio Micali received his PhD from. Finally, the Crypto Ratings Council considers Stellar's Lumens token to be more like a security than a currency, whereas Algorand's Algo token is more like a currency than a security. This is important because a security designation could crush Stellar and XLM the same way it's crushed Ripple and XRP. The only caveat with this comparison is that governments are likely to use a permissioned version of the cryptocurrency blockchains they're considering, meaning it won't increase demand for either of their tokens. In any case, Algorand seems to be at the top of the CBDC list in the United States, and that announcement alone could send Algo to the moon. Algorand is one of the few cryptocurrency projects that has serious academic credentials to back it up. Now, while credentials don't really matter in the crypto space, they go a long way in convincing early investors, and this case is no exception. Algorand has some seriously solid tech and has also been strategic in how it's used the funds in its massive war chest. There's just one small problem, and that's that money can't buy adoption in cryptocurrency. Community outreach and price action tend to be the primary drivers of adoption, and Algorand seems to have neglected the importance of these factors. When flipping through Algorand's updates, it's obvious to see that it's catering to public and private institutions and doing the bare minimum to keep people in crypto interested in the project. While Algorand might have 10 million wallet addresses on its blockchain, its social media presence, wallet downloads, and lack of dApps suggest that there are only a few thousand active Algorand users. This is definitely a contributing factor to Algo's subpar price action, but most of that damage seems to be coming from its terribly thought-out tokenomics. Despite the fact that the Algorand Foundation has a dedicated economic advisory committee, it somehow hasn't managed to figure out that demand must outweigh supply for prices to rise. In its defense, private investors have poured hundreds of millions of dollars into the project, and they're begging for some sort of return. Without schemes like accelerated vesting, they may abandon Algorand like its early retail investors. The fact that little or any of the Algorand Foundation's funds are in assets other than the Algo token means it's really stuck between a rock and a hard place. If it continues to appease private investors, it will crash the price of Algo and lose the small community it's built. If it accelerates its development to onboard more users and investors, it crashes the price of Algo and loses all of that momentum. This is why my fingers are crossed for more CBDC announcements from Algorand. That seems to be the one area where it could shine, and it's been aggressively marketing itself as the ideal blockchain for CBDCs. I personally think Algorand is up there, but it could be overshadowed by other giants like Ethereum simply because it has failed to implement the economic incentives required to create network effects. Hope is not lost by any means, though, and I think it's only a matter of time before we hear more news about Algorand and CBDCs. If today's video hit the spot, head on over to that like button and give it a pop. Subscribing to the channel is a good move if you haven't done so already, and pinging the notification bell will let you know when the next video is ready. If you're curious about what I get up to off-screen, follow me on Twitter, TikTok, and Instagram for my hot takes, behind-the-scenes outtakes, and dank crypto memes. If you feel like you can't keep up with the crypto market, join the Coin Bureau Insider Telegram channel. There, I give you the daily updates and info you need to know to make that portfolio glow. The only thing better is my weekly newsletter, where I dish out those extra tips, tricks, and tools you need to become a true crypto Jedi. If you want to support the channel, you can head over to the Coin Bureau merch store and get your hands on some of my stylish shirts and hoodies. You can find your way to my merch store, newsletter, Telegram channel, and socials using the links in the video description. That's all for today. Thank you so much for watching, and I will see you sooner than you think.